Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, March 24th, 2009. Well, it's just after 12:30 p.m. Eastern Time, and we're watching the markets trade in a very tight range today. That's generally the case after a monster move like we had yesterday. And again, you can just see the monstrous move that took place here. A good gap up yesterday, a slight little rollover, and then an explosion to the upside in a squeeze fashion into the close. Today, what you're really seeing is a very tight range market trading. The overall market is lower on the day, with the Dow down about 46 points, the Nasdaq down about 23, and the S&P down about 6 on the day. Now, some interesting technical analysis points to watch for the day, and I want to point these out. I want to discuss a little bit about what we're seeing today. But the number one point you want to look at, first of all, is this upside. See this trend line I put in at the highs of the day today? It's so far hit that 3 times and bounced off each time. So once, twice, 3 times. If you clear that, folks, look for the market to go to gap fill, which would be officially the SPY would be flat on the day, and that is approximately at, let's do a quick little analysis here and find out exactly what that price would be. And that's at 82.30. So approximately 82, 82.30 or so would be that level to watch, all right? Now, a couple other odds and ends to watch as well, folks. On the downside, you have the 20 moving average. The 20 moving average is working as a pseudo minor support line, very, very minor. You can see here you tested it, bounced off of it. Here you actually broke it, went to this support line, and then bounced above the 20 again, and now you're hitting the pink line, which I use as resistance, guys. So just keep that in mind. The ones you're looking at on the screen, if they're green, they're support. If they're red or pink, they're resistance. Now, what we are seeing here, folks, is the market continuing to trade just underneath this support resistance line at approximately 81.80. 81.80, if this market could break, could make a very substantial move to the 82.30 level, which was the highs of the day from yesterday. On the downside, this 20 moving average will be minor support, but ultimately you're going to look for good support coming down to this line at 81.20 or so, 81.23, right around that level. Now, why do I have that line in there, and where does it come from? I have that in there because what you can see is the opening price on the market oftentimes dictates certain key levels. So whenever you open on the market, you want to kind of draw that line in, and depending on which side you trade on, you can always see that this could come back into play at a later date. In addition, you want to take your highs of the day, your lows of the day, and this pivot low, by the way, folks, from today, this point we hit once here and twice, is actually a huge number. I'm going to scan back and show you. It was the highs from last Wednesday and Thursday. And right here, this is that same line. And we'll give you a quote on it here, which is just about $80.90, $80.90, and this level right here, $80.90. So you can see the lows of the day on the spiders right now, 80.87. So you can see that level is very, very good support on the downside. Now we're starting to uptick here again, folks, and force our way onto this pink resistance line. Now, the more you hit it, the more likely you are to break. And you need to remember that, folks, because it's definitely an important thing. It doesn't mean we're necessarily going to break on this one. We may, but the more times it hits, the more likely. For instance, your first hit here and a pullback, your second hit is probably not going to break. However, once you get to your third, fourth, and fifth hits, the odds increase substantially on each hit after that, on each candle that hits against that pink resistance line. So very important to understand your rules for doing technical analysis, especially the type we do, which is a very rare known art form, which is, again, trend line analysis, price pattern, and timing. That's all we use, folks. Almost never looked at a stochastic, a MACD. When I was a beginner, I kind of dabbled in that stuff, but I honestly didn't think it worked that well. Things could remain overbought or oversold for such amounts of time that it really was no good for me to use it. So I resulted to finding the mathematical and geometry side of things, which is what we go over in our premium subscription services, folks. And for those of you that do not know, go to InTheMoneyStocks.com, and you will see under the Research Center, we give out technical guidance videos with every night's key levels on the daily, the weekly, the intraday 60, the 10-minute chart, gold, oil, dollar, and even some key stocks if they happen to be popping up. In addition, we give educational videos, daily market reports with all these major levels. It's a full, versatile system, and I do encourage you guys to learn more, because this is such an important thing. Look at these lines. I mean, there's no doubt in my mind. These lines are insanely important. All right, you can see from this low here, which was right on one of our main lines. All right, these lines have been in my charts, by the way, for days and days now. I mean, these aren't lines I drew in today. These are days and days. And it's no coincidence that the market comes down to these key levels and then gaps here and then starts to make a move to this key level, then to this one, then pulls back to this one, and all the way up. And this pink line I've had in my chart for weeks now. And this scans all the way back, that same line, all the way back to March 10th. And you guys know that have been following my videos that obviously the market has had a key. This level was a key breakdown for last Thursday and Friday. And then, believe it or not, we retested that line here yesterday on the highs. And that's major resistance. That line is definitely major resistance, and you need to be aware of that. So again, folks, just notice your pattern. Very tight range today, hitting on the upper resistance line right here with support at the minor support at the 20. Decent support at the 81.20 level, and then very, very good support coming down around that $80.90 level. If we break the upside, we're going to that $82.30 level, which would be the high of the day. If you break through that, the next level you'll find on your 60-minute, and I'll show you it all the way. You have to go all the way back here, guys, to February 13th. And this level right here is the next one you would go to. And it will take me a little time to actually scan all the way back, so I may not do it all the way. But nonetheless, what you can see is this line right here. I'll put my cursor right there, give us a quote, $82.75. And if we go all the way back here, folks, that level would be the next main level on the upside. If you break that level on the 10-minute that I just spoke of, this high of the day right here, you break that, you're probably going to go to that 82.70 level. So that would be another 50-cent move past this point. Now you're starting to sell again. You guys can see the resistance working. This video is done live as I watch the market, as I analyze it live. And again, watch for this to come down. Here's your minor support at the 20, decent support here, and good support right at this lower $80.90 range. If you break that, you're going to come right into the 50 moving average. So right here is going to be very, very good support on this market. That 50 moving average will continue to creep up as well and turn out to be probably right at this 80.90 level should the market come down there as well. Okay? Goldman Sachs today, very strong. Goldman was up big yesterday. It continues to be up today, up $1.90. The 60-minute is very clear. You guys, this is your levels on the 60-minute. They're just coinciding here, really. All right. All your key levels there. And obviously, this would be one on your 60-minute to watch as well. So again, you have your 82.30 level, 82.20 to 30 level up here as your double top. And then you just associate your 10-minute moving key levels and your technical trend line analysis levels from the 10-minute onto the 60-minute chart. The one thing you want to watch for, again, on the 60-minute, you can't really see it. I can actually punch it in. Let me see if I can do a bigger time frame here. If we do 580, I think that will show it to us. Let's see. Yep, right here, guys. All right, let me erase some of these lines, nonsense lines now that extended themselves. We definitely do not need them. But see this gap right here? This is what you're watching. That would be your next spot should you break the highs of the day from yesterday. See that gap right in the chart, and that'll be your intraday level to watch for the rest of today. That's about all for today, folks, but I just want to encourage you all, come join the chat room with live video now as we constantly give play-by-play and main levels on all different stocks, any questions we answer, and so forth, as well as the Research Center. We'd love to have you aboard, and the educational thing in that Research Center is so intricate and so key to profitable trading and the elite trader out there or investor. Have a wonderful day, guys. We'll talk to you all tomorrow. Take care.